Unlike what you may have been taught in other aspects of your life, there really are no bonus points in the world of investing for coming up with your own original ideas. And a couple of professors out of the University of Nevada really drove that point home by asking the question, what would your returns be if you had simply copied the best of the best when it comes to investors? If you had bought the stocks that Warren Buffett had bought when that information became publicly available, and if you'd sold the stocks that Warren Buffett sold when that information became publicly available, what would your returns have been? And it's probably no surprise to anyone that if you had simply bought what Buffett bought and sold what Buffett sold, your returns would have been astronomically good, and you would have absolutely crushed an index like the S&P 500. For the past year and a half here on the channel, I have been documenting my own journey with a hypothetical $100,000 portfolio that I have named the Shameless Cloner portfolio, where I take 6 of my personal favorite super investors and I try to implement shameless cloning. I try to buy the stocks that they buy, sell the stocks that they sell, and 1, see how that portfolio performs over time, and 2, also document some of the challenges that come up when you simply try to clone the best investors in the world. Hopefully you've had a chance to see a recent video on the channel going through some of the moves of my favorite super investors. I will leave that linked up in one of the corners if you haven't seen that already. But now is the time for the quarterly update with the Shameless Cloner portfolio, where I will take some of those moves and implement them into potential changes in the portfolio, and also show you how the portfolio has been performing in terms of its returns since the last quarterly update. If you enjoyed the video and haven't subscribed to the Investing with Tom channel already, be sure to do so that you can catch future Shameless Cloner portfolio updates as soon as I make them. And if you're interested in checking out ShareSite, which is the tool that I'm going to be using to track this portfolio that you'll see in the video, be sure to check out the link in the description below, sharesite.com/investingwithtom. That link will get you 4 months free off of an annual subscription. ShareSite is what I use personally to track my own investment returns with capital gains or losses, dividend income, and also currency fluctuations. And ShareSite also generates a range of different tax reports that make tax time much easier for me at the end of each year as well. Now, before we get into the actual portfolio itself, and if you do want to jump to that, just check out the timestamps along the bottom of this video. I want to briefly go through some of the rules I've set up to kind of build the Shameless Cloner portfolio in a relatively structured way. Now, I basically have my Mount Rushmore of 6 super investors that drive the vast majority of the purchases and sales in this portfolio. I'm not completely closed off to looking at other investors if I need to, but at the moment I have sort of a core 6, and those are Warren Buffett, Charlie Munger, Guy Spear, Monish Pabrai, Lee Lu, and Norbert Lu. So that's sort of the basket of investors that I tend to pick the stocks for this portfolio from. I also want to build over time eventually sort of a 10 by 10 portfolio, 10 stocks with roughly a 10% allocation. As you'll see in this video, we haven't quite got a full set of 10 just yet, but hopefully we'll get there over time. And I also want to be somewhat price conscious, bearing in mind that most of the people I follow are value investors. They're trying to buy good businesses at reasonable to cheap prices. So anytime I'm looking to add a new stock to the portfolio, I want to buy it only if it's within 30% of the midpoint price in a quarter in which a particular super investor bought that stock. So for example, if a stock trades somewhere between $80 and $120 in a given quarter, the midpoint would be $100, and I would purchase that stock at no more than $130. That's the absolute upper limit at which I would buy. Okay, let's jump over to the computer now and have a look at ShareSite and give you a quick refresher on how the portfolio stood last time I made a quarterly update. So this is what the portfolio looks like on the 15th of November last year, 15th of November 2022. And at that time, we basically had a 9 stock portfolio. We hadn't quite got to the full 10 by 10. The one stock that is a 20% allocation in here at cost at least is Alibaba. We're down quite a bit on Alibaba, so that's why it's only 11% of the portfolio here. And the other ones are about 10% at cost. So that gives us our full sort of 9 stock portfolio at the moment. And this is how they ranked, at mid-November. So the largest investment by dollar value was Chevron, followed by Berkshire, Taiwan Semiconductor, which was a new stock at the time, Alibaba, Brookfield Asset Management, Activision Blizzard, Daily Journal Corporation, Google or Alphabet, and finally Process. And the overall portfolio value at that time was about $85,000. We're down a little bit from our $100,000 starting point. Okay, so let's jump over now to the overview page here on ShareSite to have a look at how the portfolio has been performing in terms of its returns so far. So since the last update, the portfolio is up slightly. So we're now up to about $87,000 in terms of portfolio value. So we're up a little. And for the calendar year of 2023, which granted has only been sort of a couple of months here, we're up about 4.45% versus the S&P 500 up about 3.6%. As you'll see earlier in the year, we did pull ahead of the index a fair amount, but that gap has closed a little. Overall, that return has come mainly from capital gain and dividends, and we're down a small fraction on currency from some of the international stocks that do sit in the portfolio. But overall, we're up about 4% for the calendar year so far. If we go right back to when the portfolio first started back in October 2021, this is how things are stacking up. So since inception, the portfolio is down about 9% versus down, call it 7% for the S&P 500. So we are slightly lagging the S&P 500 so far. Again, it's only been a year or so since this portfolio has been going, and I do want to track this over a long period of time. But that's where things currently stand. You'll see there's a few points in here where we have pulled ahead of the index in sort of mid 2022. We pulled slightly ahead of the S&P 500. We had a really rough start, which was largely due to the big kind of China tech stock exposure that we had right out of the gate. That really hurt the portfolio in the early days, but we have kind of pulled back. And we pulled ahead of the index again as recently as January. We've had a bit of a decline in really recent times. So again, we've dipped slightly below the S&P 500, but it's been fairly neck and neck right through. Some months we've been ahead, some months we've been behind. At the moment, we are slightly behind the index. Okay, so let's have a look at how the portfolio sits now in terms of some of the stocks that are sitting in there. And I'll talk you through a couple of the changes that have happened in the last quarter, given the latest 13F data from our kind of 6 Mount Rushmore super investors. So if I scroll down here, I'll show you some of the larger positions in the portfolio. Our top position remains Chevron, that is unchanged. We do have a new stock or a returning stock to the portfolio, which is actually really just a cash alternative. That's the Vanguard short-term treasury ETF. I will talk about that in just a sec. We have Alibaba, which remains unchanged, about $10,000 in the portfolio. Berkshire B remains unchanged, Activision unchanged, Daily Journal, Process, and Google all unchanged. Brookfield actually now shows up a couple of times in the portfolio. We did already have Brookfield Asset Management sitting in here, but Brookfield recently spun off their asset management business. So existing Brookfield shareholders now basically own 2 stocks. They own Brookfield Asset Management and they also own Brookfield Corporation. Brookfield Asset Management was a clone of Monash Pabrai. That's how it got into the portfolio here in the first place. So it was nice to see that since the spin-off, Pabrai has actually chosen to hold both of those Brookfield stocks. So I think we've replicated that pretty well in the portfolio here. And at this stage, at least, I am sort of thinking about Brookfield Asset Management and Brookfield Corporation sort of as if they're one stock. That's how I'm kind of thinking about the position at the moment. Now I'll scroll down a little further here and you'll see some of the previous positions that have been in the portfolio in the past and have been removed for whatever reason, which I will have covered in previous Shameless Cloner portfolio updates. And you'll notice that there's a brand new one in the list here if you've been following along closely, which is Taiwan Semiconductor. That has just been removed from the portfolio. It was a very short-lived stock in the Shameless Cloner portfolio, I believe only in there for 1 quarter. That stock initially was a clone of Warren Buffett at Berkshire Hathaway. It appeared in the portfolio as around a top 10 stock, basically right out of the gate. And Buffett has basically turned around and trimmed that position about 86% only 1 quarter later. So I really can't warrant keeping that in the Shameless Cloner portfolio with that bigger sell down. So it has been sold out of the portfolio and currently has been actually just replaced with cash. There really weren't any meaningful buys from any of the super investors that I follow in this latest quarter. There were some additions, Li Lu, for example, added pretty significantly to Google. That's already in the portfolio. Monish Pabrai added to Brookfield. That's already in the portfolio. There were even some slight trims by Buffett. He trimmed Chevron about 1%, probably not enough to warrant removing it here. He also trimmed Activision about 12%, again, probably not enough to warrant removing it from the portfolio. So there really wasn't anything to kind of roll that Taiwan Semiconductor money into. So for that reason, we are back to having a little portion of the portfolio in cash, about $12,000. Taiwan Semiconductor was actually a reasonably meaningful position. So our second biggest position, unfortunately, right now is just short-term treasuries. And we're back down to, if you view the Brookfield stocks as kind of one position, about an 8-stock portfolio. So in future quarters, if we see sort of a flurry of new stock purchases from some of our super investors, we have a couple of stocks we can work with. Firstly, we can roll the cash from those short-term treasuries into a new purchase before we need to sell anything. And we've also got that full 20% allocation still to Alibaba. So we could still cut that position in half. Alongside Taiwan Semiconductor, you'll also see some of the other previous stocks that have been in the portfolio that are no longer. Winnebago, Meta, Hilton Grand Vacations, and Countryside Partnerships are all sort of previous, older, historic positions, but you'll see the ones here that have dollars against them that make up the current portfolio. So if we just scroll up here, I'll jump back over to reports and we'll just have a look at how the current portfolio now kind of looks in terms of like just a pie chart view of how things are stacking up. So let's jump through to the diversity report and to the 25th of February or 24th February, which is the latest I can go. This is how the portfolio currently stacks up. So Chevron is about 13, almost 14%. Cash, unfortunately, is close to the same size. Next up, we have Alibaba. That's recovered a bit from the last quarter, so that's grown in size in the portfolio. Followed by Berkshire, Activision, DJCo, Prosus, Google, and our 2 Brookfield positions. So if you add those Brookfield positions together, they are a little larger than 7 and 2. It's closer to maybe 9% or so of the portfolio, which puts it probably above Google, similar in size to Prosus. Okay, there you have it. That is our latest update with the Shameless Cloner portfolio. We've been running for about a year and a half now, so we're starting to build up quite a nice portfolio. I was really hoping this quarter there'd be some really juicy, interesting new buy from one of our super investors, which would allow us to get that 10th stock finally in the portfolio. Unfortunately, we've gone the complete other direction and we're back down to 8, but hopefully there's a couple of interesting new purchases that come up in our next quarterly update. I'd be really interested to hear your thoughts down in the comment section below on how you think this portfolio is shaping up so far and how you think it may perform moving forward. I'd be really interested to get some feedback on that. Like I say, if you enjoyed the video and haven't subscribed to the channel already, be sure to do so. But that's it from me, and I'll see you on the next video. Cheers.